Hey guys, what is up? My name is Artur Nag and I'm super excited to welcome you in my first YouTube video on this channel. So for this reason, please allow me a few minutes to introduce the channel, myself, and how I plan to help people make more money. The topic I would like to talk about today is sort of an introduction to how the stock market works and why some people would like to own stocks and shares in companies. I feel like recently it has gotten a lot of attention because in these uncertain times, as people would like to invest their money, they're just not really sure how exactly to do that. And I also think it's infuriating that they don't teach that in schools, like financial literacy. So because of that, I would like to show you some of what they don't teach in most schools. If that already sounds interesting to you, you might want to consider subscribing, as I created this channel with the aim of sharing my knowledge on topics like wealth building, personal finance, investing, real estate, entrepreneurship, business, and personal development. You can kind of see where this mixture is going in a nutshell to help people make more money and fare better in life. Well, we'll start with the very basics and work our way up from there if that sounds good to you. However, we're not going to change the world in 10 something minutes per video. This video is more to give you a taste of what it's like, and if you like it, then we can go from there. So please hit the like button so the YouTube algorithm will know that we are about to create an amazing community and help a lot of people succeed. As much as I would like to skip everything and rush to discuss the stock market in details, I would like to give you the best advice on the long term, and that I believe starts with giving a bit of context on who I am so that you can kind of understand the point of view all the information on this channel will be coming from, and so you can piece that into your own research when making financial decisions. Because it has to be said, you should never make any financial decisions based on what you hear at my YouTube channel or any other YouTube channel for that matter. Just like the majority, neither I am any kind of financial advisor, just a nice dude on YouTube, so take it for what it's worth. Always do your own research, called due diligence or DD. So, hello again, my name is Artur Nag and I'm a 22-year-old attending business administration and management at the university level currently. I am a co-founder of a consulting group that helps SMEs digitalize their presence. I have just finished all my real estate exams and I'm looking to make it official and start working at an agency. And in addition to that, I also have a video game that we are developing and releasing bit by bit. That was an unintentional pun. Now, the more interesting part is that I also started investing about a year ago, on the 11th of February 2020 to be exact, because of two reasons. First, I realized relatively how much money I had sitting in my drawers, and second, how much money I was losing every year due to inflation. Now, I got to learn about a lot of cool stuff in high school/grammar school, but this wasn't a point they really emphasized. Okay, so I thought I should find a good way to put my money to work instead of just sitting there. And I thought that was also a good time to see if all these fancy concepts, stop working for money, make your money work for you, earn while you are asleep, financial independence, passive income, all these concepts whether work or not, or just what are they about. So my first choice was the stock market because I learn about it on a day-to-day basis and I have gathered some experience and understanding of what's going on there to feel comfortable getting into it. And to put things into perspective, as of making this video, I have invested $15,090 over the course of 1 year, and so these investments have made me about $6,600.19, which would be a return of 43.7%. While it is not entirely about buying shares and hoping their price will skyrocket magically, in fact there is more to it than magic, there is a different element to this story as well. I also receive dividends, which are a form of payout that companies can issue. I received $391.24 in dividends per year, which translates to about $1.07 a day, which I get pretty much no matter what. I just get paid to hold these shares basically, and I don't have to lift a finger for that. And yes, those are the real numbers. That's how I plan to do it full transparency, because I just hate when other YouTubers beat around the bush saying, oh, I made so much money, you won't believe it, and then they just never actually say it. I don't think that's the correct way if you would like to teach someone something, so let me know how you like my way. With all that being said, let's begin our wealth building journey right here together with explaining what the stock market is, and in one of the next videos how you can actually make money on it. I got you all covered, don't worry, just give me some time here because these things take some time to explain. Plus, building wealth isn't done overnight. It's more of a process that requires the right mindset and some time, but it's totally doable. So here we go. So what is the stock exchange or the stock market? Well, a market is a market, we get that, you buy and sell things, but what are these shares that all these people are talking about? Now there are two terms that you will hear an awful lot once you start reading and talking about the stock market. One is obviously stocks and the other one is shares that I have just mentioned a couple times. They essentially mean the same thing, which is ownership in a company that is listed on the stock market. And yes, you heard that right, you can actually own a tiny piece of your favorite companies. Now isn't that awesome? The only slight difference between stocks and shares is that stocks refer to ownership in companies in more general terms, while shares refer to ownership in one specific company. Real life examples would be best energy stocks to buy in 2021, or I own some Apple stock, I have 26 shares, which I actually do. You can think of shares as a measure of stock. So the companies present on the stock exchange are called publicly traded companies because you and I, the public, can trade their respective shares, which is the opposite of a private company. These companies get listed on the stock exchange through a process called initial public offering or IPO, which is a topic for another day, but the main point is that the shares that they offer represent a proportionate ownership in their companies. And essentially, you are trading with these ownerships on the stock market in the form of shares. To understand why some people would like to own these shares and thus a part of certain companies, here is a quick economics 101, literally the first lesson, supply and demand. Now, supply and demand is really helpful because it will tell you the price of one thing given a supply, how much is available of it, and the level of demand for that thing, how much people want it. And since supply is almost always fixed in the stock market, just because the company has issued a certain number of shares and it is changing so slowly, the demand side will affect prices to a way larger degree. Now, there are two layers to demand that will affect share prices. The first is how desirable the stock market as a whole as an investment is. That has to do with the level of uncertainty in the economy, interest rates, etc. Things that are changing on longer terms. Just a quick example with interest rates. Imagine interest rates are high. If you could put your money in a savings account, which is considered less risky than investing in the stock market, and still earn a respectable yield on your money, why would you invest in the stock market? So this would drive demand away from the stock market, causing prices to drop. The second layer is how desirable a specific stock is. This has to do with how well the company is doing currently, what are the expectations for their industry, what news surface about a company, and how likely are they to be doing well based on those news, etc. Things that can alter the demand for a stock on shorter terms. Let's say a company published its earnings report and they smashed expectations. They made a lot of money, things are looking good, and they are expected to make even more money in the future. And here is the first reason why people would like to own shares in companies. Since we know through shares you can become a partial owner of a company, and since this company just reported insane earnings and the future is looking bright, a lot of people would like to be part of this company because if they are going places, since you're a partial owner, you're also going places. And since more and more people would like to join this company, the price will just go up and up. Again, limited supply, increasing demand leads to higher prices. Let's rewind a bit, 1 month, 2 months maybe, just before these earnings were published. Let's say you bought some and now you have a position in this company. From that point on, you get to enjoy all the good news published about your company because those news will generate an extra demand for their shares, and extra demand will lead to higher prices in this case. You get to enjoy these increase in share prices, meaning that as the whole pie gets more valuable, so does your little slice as well, since you are a owner of a now even more valuable company. And so you can decide at any point to sell your shares at a higher price than what you got into it, generating you money in the process, given that good news or price increases outweigh bad news or price decreases. Now, the second reason why people love to own shares is, as discussed before, through your shares you become an owner of a company partially, but that also makes you entitled for a proportionate part of its earnings, given that the company issues some of its earnings in the form of what's called a dividend. The reason why some people love dividends is because when you invest in quality companies, the flow of dividends is much more reliable and predictable, and it's just way more easier to rely on than short-term share price fluctuations influenced by random events. Plus, you never actually have to worry about selling your shares at whatever price because essentially you are just getting paid in the form of dividends to hold your shares. But don't forget, when investing for dividends, you will also see your share prices change. It's just an addition that your company can afford to pay its shareholders in the form of dividends. If a company pays a dividend, it usually pays it on a quarterly basis. However, some pay semi-annually, annually, or even monthly, mostly real estate investment trusts or REITs. Dividends are usually paid by more mature companies, since younger ones just tend to reinvest all their earnings in their growth, and thus nothing is left to issue for shareholders. You can Google any company and see whether they pay a dividend or not. It's not a secret. In fact, they do it to attract more investors. And by the way, you can just Google anything about a company nowadays, so just feel free to look around what your favorite companies has to offer in terms of stock market data. Okay, so here's a hypothetical company, company XYZ. So whenever you Google company XYZ, you would see that they pay an annual dividend of $2 and they pay it quarterly. Now, since there are 4 quarters in a year, that means you get the $2 split into 4 parts, which would equal 50 cents of dividend paid quarterly, which would equal $2 total in 1 year. All of this is to be understood per share. If company XYZ's share price is $100 and you see that the yield is 2%, that means you would get 2% return on your money in 1 year just in the form of dividends, and not talking about share price increases or decreases, dividend increases or cuts. If you decide to buy 3 shares for a total of $300, because 1 share is $100, you would of course get 3 times the annual $2 in dividends, meaning you would get $6 of annual dividends, which also equal quarterly payments of $1.50. But your yield would still be 2%. That's how dividends work. To conclude everything, the 2 main reasons why people love to own shares is because their shares can increase in value over time, and that because they are partial owners in a company, they are also entitled for dividend payouts whenever a company decides to use some of its earnings to issue dividends to reward its shareholders. I have to mention though that investing in the stock market is considered a riskier type of investment when compared to the likes of government bonds or bank accounts. So it is something you will have to see for yourself whether you are comfortable with the amount of risk the stock market carries in itself. And if you decide to invest in the stock market, whether you want to invest in safer, more defensive or more aggressive stocks, so you have all these different kind of levers that you can use to adjust the amount of risk that you are taking on once you start investing in the stock market and start building your portfolio. Alright everyone, I think that's plenty for a first video, and to get you started to think about the stock market as an investment opportunity and to perhaps start reading some news on the stock market, for which I would recommend MarketWatch, Seeking Alpha, Dividend.com, or even Nasdaq.com. Those are the ones that I use personally. We still have a lot of topics to discuss that can help you make more money. In fact, we just got started on investments and the stock market aspect of it, and we can still talk about things like how to pick the right stock for yourself, growth portfolios, dividend investing, index funds and ETFs, tax loss harvesting, you name it. If you don't want to miss those, consider subscribing and smashing the like button if you haven't already, so that the YouTube algorithm will show this hopefully helpful video to more people, and that I will get to know how many of you like what we were discussing in this video. Give me some feedback, leave some comments, and we will go from there. I hope you learned something today. Thank you so much for watching, and until next time.